Today's Sunday, February 26th, 2023, back for another daily review and market forecast for the upcoming week. Going to start by breaking down a couple trades I took on Friday. Beautiful price action on Friday, and a lot of great things to comment on. And only got chopped up a little bit at times, but overall, very, very clean price action and just very clearly seeing what's going on with price right now. So I wanted to get it out there. And first thing I did was something I never do, which is I took a trade. Well, I shouldn't say never do, but I rarely take a trade like in Asia or right before London. Usually I only trade indices in New York. But after I did my last recap, which was Thursday night, um, I looked at the chart and I noticed, so we had been in this broadening formation. When we see this broadening formation, it's just sort of a shakeout. It's a type of consolidation that's trying to shake people out. So we have this big down move. Market is bearish. If we go to the daily chart, we can see that we've broken through this low here. This low reacted off of this imbalance, which formed after this big bullish move. This bullish move ended hitting the liquidity here, this rejection block. And if we end the 50% basically of this long wick on S&P, it actually made a higher high, took the buy side liquidity. So then formed this low, rallied, failed higher high, comes down, takes out this low with imbalance. We break through it. I messed up the short on this day, on this Thursday, but identified that this was a broadening formation and that eventually we are likely to see a continuation in the existing direction. Now it's just a question of when. And at first I thought maybe it could be into this week where we break the broadening formation lower because there's a lot of high impact news. And that's usually where I would expect to see the broadening formation kind of resolve lower or higher if it was a reverse situation. But then I saw we actually had PCE on Friday, which is at this candle here. And so we got this sharp move up at the end of day Thursday. And at this point, I had no inclination to want to sell. I didn't want to short this order block here, even though this level is nice, this daily level at 12, 243-ish. And but what happened? If we're going to see this as a liquidity grab to go higher, I said this in a recent video, you don't want to see the market hanging around. You want it to see like it snatched the liquidity here and now it trapped everyone and now it's going to drift higher and push higher. If we were bullish, if that was what was going to happen here. Instead, we saw this consolidation. Now, of course, in a consolidation, we can also see, a consolidation that before it leaves as a consolidation, it spikes the high and then goes down. That's very possible. But what made me think that that wasn't going to happen here? And why did I take a short in this time window before even London? It was more at the end of Asia, London kill zone time. But when we are bearish, now this is a trade in FX that I would have taken in the past when I traded Forex, but I don't really trade Forex that much anymore. But the idea is if you are bearish on a particular day and you would generally want to be selling above the midnight opening price. That is, or as close to it as you can. And as you can see, I've drawn out the midnight opening price right here. And what happens? The market rallies up. It's a Judas swing, breaks down, comes up back up one more time, and then sells off. So where's the setup? First, we can start off by marking out new day opening gap. That's the difference between the close of the Thursday candle and the opening of the Friday candle, which is right here. Draw that out in time. What happens? The market dips down, then comes back up, breaches this level. Is it going to break above? No, all it does is it reaches up to this imbalance, breaks down, makes a lower low here, leaves this gap, market consolidates, comes back up into this gap, creates a new gap. So when I saw it here create this new gap and we were getting close to midnight, I didn't take this on my futures account because again, I would see this as I'm not as comfortable taking it on my futures account. I would just took it on two of my funded, my CFD, FTMO account. So it was a lower leverage. I just felt a little bit more comfortable. I could have taken it with some micro contracts instead. What was that? I mean, actually, it wasn't so bad. It could have been 20 points. Because my stop was kind of up here. I wanted to give it a little bit of a cushion. So I do wish I had taken it on my futures account, but it was only on my. Let's see if I even have the screenshots. What was it here? Yeah. So here, this was right before midnight. I saw it reject, and then on the other account was actually as it pushed up into this. Can I zoom in even? Bullshit. Oh yeah. So this one here, and then the idea was I was going to wake up before the news and make sure we were a good distance away. I was really imagining this scenario play out, that it was going to kind of just straight dive from the London onwards. And the reason why I thought that is just this is something I've noted in my journal. So this is why it's important to keep journals and keep just kind of records of what you see day in, day out. Because very often I would see days like this. So this is from Wednesday, February 15th. So this is, I did not get involved in any kind of trade on this day, but on this day you could see, had we been bearish, you can see you get these at the top of this move, you get these tiny little candles in Asia and then just a straight drop overnight before New York Open. By the time you get to New York Open, you're kind of like all the way down here already. And now you're like, oh, well, I missed all that move, and that's fine. And there was a trade here on this day that worked out well. But you can see the same kind of thing happen on this day. And there's many days like this where I've noticed you get these kind of moves in Asia. So when you're confident in the direction of the upcoming day, and I wasn't on this particular day, but just to show you that had I been, same kind of thing. You get the opening gap. Let's just change that to new day opening gap. New day opening gap, market rallies. Here's midnight New York here. Come back down. Test the gap, rally, spikes the midnight New York. I got two midnight New York levels. It's this one. Spikes the midnight New York level, starts to break down, and now we have this gap through the new day opening gap. So new fair value gap. Price doesn't even make it up to it. Instead reacts off of this up close candle. And if I clean it up a bit by going to the 30-minute chart, you can see that it's this bearish order block here, coinciding with this new day opening gap, which had been impulsively closed through. So this would have been in London session, which I would have been asleep for anyway. And so once I basically saw that same type of thing happen on this day, it was really shortly after I did my recording on Thursday night. So it's still Thursday night here where I live. And so I just saw that we had created this move off of the new day opening gap, creating a new gap. And I was like, you know what, I'm not sure. I was like, this could stay in a broadening formation, but we did have high impact news coming up on Friday. And I thought, okay, maybe we do break it. And I woke up before the news and saw that we had been quite a bit of distance away. And so I left the trade open. Now, if I had looked at 5:30 my time, so that's 8:30 when the news came out. So I woke up at like 5:15 just to check. And if we had been like kind of hovering around this area, I would have closed the trade for sure, just because I would not want to be taking the chance that with this type of a news release, I just didn't want to be on the wrong side of it. So at the time, I was able to move my stop, into some slight profit, gave it a little bit of room to breathe in case it spiked up, and then we get the drop. And now it looks like now I wanted it to see. So as I got into the session for New York Stock Exchange Open, I wanted to see even more of a drop off. I wanted to see a continuation. But whenever we have a big move overnight, we have to expect that the AM session is less likely to see that follow through. It's more likely to be choppy and to consolidate. And, because the market, it doesn't want to give people the easy trade of, oh, I've seen it take a straight dive overnight. People want to join the action on that. It doesn't want to accommodate them. So people want to chase this and they get impatient. And so of course the market isn't going to just continue in most cases. But with that said, I wasn't sure. It's like, are we going to continue this broadening thing? Is it going to come back up, take out these lows and then work its way back up? I suppose it could, But when we see the displacement through the level, I think it's not just that. It's like, are we rejecting back in? So in this case, if I were to compare it to these lows, look how every time it breaches it, it immediately snaps back. Here too. Seems aggressive, but it just barely breaches it here and then it instantly snaps back into the range and comes back up. Whereas in this case, what does it do? It breaks it, high impact news, creates an imbalance, and then continues lower. It doesn't snap back in instantly. So that's what I was framing my bias for this session. Once we got to New York Open, which was right around here, I was hoping we would see this another sharp move down, but I was also on guard for the fact that, well, we had the big move during the overnight, so maybe we just kind of consolidate. And I thought maybe in the afternoon session we see the second leg lower. Didn't happen. It just kind of stayed. And there's some higher time frame supports here, which is another reason why it just kind of stayed in this range. But now if we look back on ES, this is what I was really focused on this day. I saw this as weaker of the two, or no, not, it actually wasn't, but I did focus on this because let's take a look. So in one sense, I thought it was more bearish because I liked how it had tapped this level here, broke down. I thought we could fill this gap. We did. I thought maybe we could see this low get reached for, and maybe that's just something that's going to happen this week. But actually, this is going to be an important level, so I should have it marked on the chart. This high of this candle here, you can see that was the low of the day. But at the time of New York Open, there was a sell setup. So just to recap it quickly, we had this liquidity grab. So here's our 9:30 New York Open, New York Stock Exchange Open, market rallies. Now, it made a higher high on all three, so there was no divergence amongst the indices. However, there was divergence against the dollar. So that's one thing I didn't talk about in my opening range video, but it's a type of divergence you can use when the three index futures are moving the same way. So for instance, I guess I'll just bring it up. Let's see if I can find it. You can see here. So I have this kind of chart open as well. So you have, if you follow the mouse here on all the windows, I'll just draw it. Fuck it. Higher high. So we have the liquidity grab on all three. But we have here, you would expect dollar to make a lower low because it is inversely correlated, but instead it makes this higher low. So you can use that as a form of to sort of confirm a liquidity grab. So that's why when I saw the market break up on S&P in this case, I was looking to short. Where did I sell? I think I just straight up sold on the break of this low through the open. And my stop was, if I go back to the 5 minute, it goes above this mean threshold. I just thought, hey, maybe that we do get this continued decline. So I was aiming for down here. And we got a little bit of a fall through, but we got a little bit of a drop. Let's go back down to a lower time frame. And let's put on the other time windows because this is what I'm always looking at, 10 and then 10:30. Now this is when we had a news release right here for consumer sentiment, 10 a.m. Let's just call it high impact news. So on one hand, I was a little cautious because I was like, okay, we didn't, from when I entered here on the 1 minute, not the 2 minute, we haven't really displaced. We did displace here, but we have not seen any further decline. And we're just kind of chopping around and now we're getting to 10 a.m. I did not reduce my risk yet at this point because I literally thought, hey, we have this imbalance here. The market could just spike up and use this news release event as a reason to just tap into the gap and then sell off. And so I was thinking, okay, very well, let's just keep the trade open. Let's not touch it. And then what ended up happening was it did come up basically towards my entry and then started to decline, at which case I trailed my stop more or less above this high. I don't think I took anything off. And then we started grinding and then we got to 1030. And now this is where I'm starting to get a little bit like, what's going on here? We're not seeing the continued displacement lower. And of course, again, we had this big drop overnight. So the market's just not going to want to usually continue that momentum. So then it becomes a little risky. The longer we get to 1030 and the market doesn't move lower, the more likely it becomes that, these highs become targets before a move lower. So if you look here, let's just get rid of this. We have this 15-minute. Oh, no, I know. That's what it was. Okay. So we had this volume imbalance on 15-minute. So I had this marked out. And I did not want price to, exactly. So I saw it rejecting it. And so I had my stop above here. And I was like, okay, if it moves down, great. If not, it doesn't matter. So that's what happened. It came back up, took me out, negligible gain. Meanwhile, this daily level we already established is a daily order block. So it is a high time frame support to be aware of. The market, let's get rid of this. So after the high impact news, we're just getting, remember in the opening range video, we're seeing congestion. We're not seeing a green light lower. And the reason why, among other factors, we can say is this bullish order block here that created this imbalance, and this big up move kind of originated from this point. Along with the fact that we are building the opposite end of the weekly range, we've had a lot of expansion lower. So we expect Thursday or Friday to make the low of the week and eventually kind of push back into the range to create the lower wick. So it makes sense that would happen at a high time frame support. So confirming that with the lower time frame congestion, price action, it's very choppy. We're not seeing this willingness to go lower. And then price comes out, takes out the short-term high, takes me out of this trade. And now it's about thinking about what's next. So one of the key setups that I'm going to talk about more and more in the future, and I might make a separate video on it because it's very, very powerful. And it's basically, if you have a down move, such as this leg of price, you can see it produces an imbalance right here. And if the way I look at it is, if we're going to continue this down move, price might come back up and fill this imbalance. But if we're to continue lower, it should respect it and then continue to break lower. But if we've reached a higher time frame liquidity target, such as this order block, and we violate this on a closing basis with a strong close through the imbalance, chances are you're going higher. We are looking for targets higher, such as this high, the high of the session. And so how do we take advantage of that? Well, you can see we draw out this price in time through. We get the closure through it. You can already see how it played out, but at the time, so now we're heading into before the lunch hour. So lunch is here, 12. So I was looking for, once we had this unwillingness to go lower, I was looking at this high as I want to see this high taken before lunch. That becomes the new goal at that point. And it's basically a scenario. I don't even know. Do we get a break below? If you're following me. Okay. So it's basically a scenario 2 buy setup. So if you open the opening range, we wick the low of the opening range. Now, where do you enter? Well, those videos I talk about usually entering, somewhere around here on the low end, but you don't have to. You can enter really anywhere where it makes sense to, as long as you can frame the trade. You're just using this to give you context for why you're expecting a move in this direction. But essentially, you have a wick of the opening range low into a higher time frame level. a rejection of the DR low, pushback in the range. We create this imbalance. And now we flipped on the 15-minute. We flipped. That's what I call it, a flip. I think it's also called an inversion, but a flip of this imbalance. We flip it, we close above it, and now we look to see this as support. So we marry an idea from this leg down and we overlay it with an idea from this move up to get the right amount of confluence. So we have this consolidation. You can see right here. You can see this on different time frames, but I was looking at the 1 minute. But we have, this is the area that pushed us through and got us to close above the level on the 15-minute chart. And so for me, this is basically an order block, gray, and the trade was, my stop was below this, just in case, because sometimes you could get a wick, like it kind of could wick through and maybe hit this and bounce here. So, you don't need to be so tight with it. I mean, you could. It would have been great in this case for me if I had done that. Now for this trade, I took most of it off on this here. We had this little imbalance inside here. So I took majority of the position off, and then the remaining contract I took off here at the high. Oh yeah, well wait, I should say though, I did get chopped up. Oh, that was later, wasn't it? Yeah, that was here. Okay, so I was very active on this day. Probably too active because I did give back some money that I wish I hadn't. But oh yeah, so then I saw, okay, we took the high here, created at the opening range, but I'm still bearish. I'm seeing, as I mentioned before, a break. This is a break below the broadening formation now. I'm expecting to see movement lower. I don't see this as an immediate reclaim back in to go test top end of the range. That's much less likely to me, particularly since we've gotten this displacement from the news event. So I wanted to see this kind of general area hold. I know we could go above it a little bit because we do have some imbalance here. And I saw the first high get violated. So we know the morning session was likely to consolidate or not give the easy short. So it lured in shorts. It came back up. It took them out here. If you were just kind of shorting, expecting this to hold. And then I thought, okay, I'm going to look to short again. So that's why I went to short. This is actually where I got chopped up. If I go to the 10-minute chart, what happened here? Right. Okay. So after lunch, let's get rid of these lines. Or was it after lunch or right before? Maybe I didn't have time of day. Oh yeah. Okay. So it was towards the end of lunch. So that was probably the problem. I did not have. So this is where I just got a little too overactive. I saw us take the liquidity here and then start to break down. And once we lost this level here with this nice impulse below, I got involved here. I shorted this. My stop was around here. And I actually, so this was showing an up candle. And I thought, I was originally trying to short this level, but I was just kind of a little bit overly aggressive. And once it got up, I kind of got the top wick of this and then it started to push down. So I was pretty happy at first, but I wasn't really considering this daily order block as much as I should have. And this imbalance right here. And just was a little too much of imposing my view and my bias of what I thought price should do based on, hey, it took this high. We broke out of this broadening formation. I like this as a resistance. We rejected it. We're coming down. We're flipping this level. And I thought, you know what? I'm going to stay short. And of course, so I should have done, I was still fighting this. It was looking okay here, but then once we displaced over this high, once we saw this displacement and then this closed with this gap, I should have closed it. I should have closed the trade. This candle here, once it wicked down and then closed back above this high, definitely should have closed it there. Instead, I just lowered my stop to above this high, basically. So I did reduce the risk slightly, but again, just kind of I was just still forcing my view. Well, there was imbalance here. So maybe it wasn't such a bad, it was a chance. It didn't work. No big deal. And then we're pushing up, and then I got chopped up again at first right here. So I took another loss. So far in the day, caught a nice move on my other account, not my futures account. Then New York opened. I got a little bit of a profit here from this initial decline, a type 2 liquidity grab, but not much. Then I got a nice win here on this move up to this high. Then I took a loss after this breakdown here, and we got this rejection, reduced risk loss at least. Then I took another loss here after we regained the open. We formed this wick, bullish engulfing, but really just a liquidity grab over this high. And so I bought here and aiming for this high, more or less 2R. Got taken out, and then I noticed, so this might have been a little aggressive, but it worked for me. And I just saw it clearer. So I was flipping through and I saw it, here we are on the 10-minute. Same idea. So this is a 15-minute fair value gap as I showed you here. And so I could have used this as well, but it's such a narrow kind of tight range. Here we have these overlapping wicks here. So if you take well, that's something else I'll talk about. But if you just look at the 10-minute, very cleanly, it's just a little bit more of a well-defined, and I can get rid of the DR indicator to clean it up a bit. Get rid of this. Now we have this 10-minute fair value gap, and it's the same idea. So here, this is where I got chopped up. Where did I get chopped up? So I got taken out of my trade right here on this candle. Then I noticed also we had this imbalance here, and I noticed the flipped fair value gap on the 10-minute here. And so I literally had another entry going more or less at this high, the high end of this range. I like this candle. I like how we wicked it here, spiked all the way down. And now notice this is at 1:30 Eastern time. So ICT talks about how, I'm just going to call it PM session open. He talks about how you can get a Judas swing at this time. And so we get this sharp move down, which I wasn't paying attention to earlier. Sharp move down to fill this imbalance, big expansion away higher. So again, order flow now is shifting bullish. And so combined with the flipped fair value gap from this leg down on the 10-minute, so we're overlaying that with the lower time frame consolidation on this up move right here. And then the stop for me went here, playing it safe below this low, shouldn't be violated. And then now targeting this high. So on this, I took off most of the position here and I kept a runner just in case we wanted to reach for this news candle high. Sometimes it does that. If you go back to here, you can see on this day, we had high impact news at 8:30, same time, sharp move, and then the market moves back up towards that level towards the end of the day before selling off again afterwards. So that 8:30 news candle, that was hey, maybe we are going to come back into this range, and I will keep a runner on just in case. So I kept the remaining contract on, trailed it below this low once this pushed up, and then sure enough, the market came down, took me out of my runner. Okay, so that's it for what happened on Friday. The week just opened up, and all I'll say is that we do have this. Let's just look at NASDAQ since I normally like to trade that. We have our new week opening gap, so let's just watch and see how price reacts. We would expect to move higher, kind of a Judas higher before selling off lower. If I look at the daily chart, as long as we're below this low here, I would expect to just continue seeking lower liquidity levels. I also like how we have this volume imbalance right here. So I will keep an eye on that. Now if we go to the weekly, sometimes it can be very simple. We're expecting weekly bearishness. So we could come up, and it's all about assessing where is the high of the week likely to form. So all I'm thinking about is this new weekly candle. Where is it likely to form that high of the week if I'm expecting lower prices down to this imbalance? And so I'm expecting price to reach towards this candle, towards this level. And so now it's just a question of when. Well, we expect price to make a Judas higher as it's doing currently right now. Now, is it going to stop exactly where it is and trade lower? That could happen. You have to ask yourselves, what would make it do that? Well, we want to see price align with time. So right now is not a time where we would put much weight into, since it's still very early into the day. But in theory, we want to see it reach up into a premium level, form a displacement lower at a key time, and then take that trade down towards this target. So that's what I'm going to be looking for at the beginning of the week. We'll check in with you again soon and hope you're all having a good one. I'll talk again soon. Bye.